All right. So yesterday we talked about the the basically value and balance, right? We went over value, we went over balance, we decided how to track it. We went over a couple of different ways to know where the inventory is at. Um, Identified where value is going in the current direction, right? And that's all in good. We like that. But what we'd like to know, right, is how to trade that, right? That's great that we can now um, identify it, but now we need to kind of learn how to trade it. And so, first things first, basically, what happens is we've got to always, and I like to do it the next day. You can do it after the market closes. I like to do it before the market opens. I know sometimes, if you're on the West Coast, you only have a limited amount of time besides waking up at like 2 a.m. or 3 a.m. to try to be on the market in time. So maybe after the market's over because it's still only 1 o'clock on the West Coast. But if you're on the East Coast, it's 4 o'clock. You're kind of drained. Better to do it the next day, I think. And that's self-reflection, right? You need to self-reflect kind of on what happened throughout the day. That way, you don't carry any biases forward into the next day. Right? Because a lot of times that will happen. You'll kind of maybe if you have a negative day or even if you have a positive day, you'll carry that into the next day, and it can kind of be misleading if you're getting too narrow focused, right? Because after a winning day, you kind of feel unstoppable, right? Or after a losing day, you feel defeated. So you want to be able to kind of erase that or reset back to zero and then go forward, right? So when we self reflect, we have to start at the beginning of the previous session, right? So we want to put the profiles in, and we're just going to use yesterday um, as an example here. So this is yesterday's overnight session, and the settle from yesterday was like 1250, I believe, right? It was right around here. And so one thing that we had decided was if the market was going to be able to hold above the prior month's range, then we probably were going to stay up, right? And so we'll expand this profile just so you can kind of see here. And so we had talked if the market was able to hold above this range, then we would expect it to stay up, okay? The 12 or so was the settle. You can see overnight opened, close to 10 and kind of just traded down, traded up, broke right around that prior month's low. That makes sense. And then just started kind of to balance a little bit higher before starting to come down early into the session or into the cash session, right? And so we know the settle was 12. Market opens higher. Just trying to get it so you can see the profiles. Um, and pretty much, I mean, A period. If we made it slower, it would be a little bit more balanced because it was kind of a drain to the downside. But we did, from the open, get a push lower, and that A low was about 14. B low tried to hold, but then actually took it and got back to that 12 level for the settle, right? And so the first question you ask yourself was there a correction to overnight inventory? And in this case, the answer is yes. Next question, you look back, and this is kind of looking back at the trades you took, would be did you focus on value? right? Were you trading value or were you just focused on price all day, right? And yesterday would have been a tough day because for the most part, the best trades were early shorts as the market could not hold the previous day or previous month low and could not hold the settle from the previous day. And we kind of assumed based off of our plan, if we pull up our plan for that day, is that the 22nd? So our plan for that day, and this is kind of on a condensed profile, but we had kind of assumed that there was buyers and stuck shorts below the 44.10 to 44.98, and we assumed that there was probably going to be some buying somewhere in there. Okay? And then we had marked the lower distribution as well, and then looking for it to test up here to this like 44.32 to 44.50, that kind of being the imbalance area where it would look for balance somewhere above that level. And so if we look here, right, we didn't quite get um, as well. We got a little bit lower than we thought. I thought maybe they were going to kind of stick to 44.10 early, and they didn't. They melted lower for the rest of the day, but stuck to 4400. We see the previous settle being that 43.99. So in it depends on your time frame of trade. If you're planning on being in a trade for 10 minutes, 30 minutes, 50 minutes, 1 hour, one day, right? These are short-term trades. I think a short-term trade is even a trade taken today and taken off tomorrow. That's a short-term trade to me. So if you were to put on a trade late in the day yesterday towards the close, that would have been, and then maybe traded it off in the Globex session when it hit that 25, because 25 was a key level, right? The mechanical high. So just to get that correction, mechanical inventory, take your trade off, and it would have been a good trade. I actually took a trade yesterday from overnight from 4402 and then took it off um like 4410, I think 4410 half, but should have just held it and kind of believed in the trade, but I just chickened out. Next question. Did you understand that what the competition was doing, right? So as the day was going on, what can we kind of understand about it? Well, really early on, it left very mechanical references, starting with the A high, which was the T1 high, or which was the Globex point of control. I think at the time it was. Um, and then the B high, then the CD high, and we can see these off this here. B high is right at the A halfback. The CD high is right at the B halfback, and they're equal, making them weak. And the D was really a nice trade because it opened, couldn't break the C high, and then just traded lower for E. So I think that was probably the trade of the day, unless you took a long late in the session and are still. Um, the reason I'm kind of bringing this up is like, do you understand what the competition was doing? Well, competition was getting short, right? Short time frame traders are getting short. That's what these continuous mechanical references mean, or as Jen from Jim Dalton Trading calls it, sequencing. You start to get them in a row, and the market never really broke lower. It didn't really get a spike down or even put any excess to draw in buyers. It just looks like the selling shut off, right? We get a poor low, and then you kind of get that bounce in the overnight. They retested the exact same level. Market opened up at the 10 and then traded higher. So your competition getting short, right? They're getting offsides. Next question would be, how was the tempo and did anything stand out? Well, we know the tempo yesterday was trash, right? It was very slow, very just chop, chop, chop. A little bit of volatility picked in that J and K, but really just couldn't get anything going as far as on the buy side. The tempo was, and even on the sell side later in the day, is tough to get in. And then next question would be, how was today's structure? Right? What stood out to you? Any key points? Well, I always like to mark very mechanical things like a poor low, right? Or these mechanical highs. And if they become days old, it's not as important, I don't think. Um, because that short-term inventory is not going to be in a couple days later. They're out, right? So it's not as important. But the next day it becomes important. Even during the Globex session, you can see, like, this thing kind of holds as support, pops, liquidates through, market's breaking the high. The next question, did you go looking for a trade? Right? Did you go forcing a trade? And we're talking about the 22nd, remember, right? So did you go looking for a trade that day? Put your trades on, or like, use a line and like mark where your trades are at on the profile, if they're long or short or whatever they are, and see if you kind of forced it, right? And the way you can see if you kind of forced it, if we go back to yesterday's lesson, is, are you focusing on value? Because where were there good buying opportunities? Really, inside yesterday's value area, you found good buying opportunities every time, right? Came down in there, came all the way up to the 12 from like the 90s. Let's just call it 90. Let's call it 4,000. If you bought the 4,000, 12 points up, 6 points down max. Same thing here. This time it goes 14 points up. Same thing here. This time it went all the way to 24 points up. So if you placed any trades long in here, you probably didn't go looking for a trade, right? You let the trade come to you, which would be the next question. But if you were getting long here, above that area that we were talking about, right? If you're getting long inside here, you're looking for the trade, right? So reflect on that and think, okay, yesterday I was forcing. Today I need to be a little bit more patient. Like I said, the next question is, did you let the trade come to you? The next question after that is, were you patient, right? Because sometimes you're sitting here all day waiting for the trade to come down into your zone, and it just doesn't do it, doesn't do it, doesn't do it. And I was kind of waiting for this thing to break yesterday, and I had some trades just, sitting down here kind of waiting in the chomps, thinking that we were going to get this bounce. But instead only went with one because I was scared, right? Kind of nervous about the thing, but definitely patient, because I'm not throwing on a huge position. I'm kind of let the trade come to me and then put on the full position, right? So patience is a big key, because other times, you know, it comes to you and you let it bounce around in your zone, you take your execution, it comes boom. But if your zone is lower and you're trading outside of it, not really patient, right? So that could be something that you goal yourself with. I need to work on my patience today, because yesterday I was not patient. And then number 9 is, did you lose emotional control? A lot of times when you're not patient with your trades, you lose control and start to overtrade or start to force trades. Um, and that kind of, can be a little bit tough, right? A lot of people can, what do we call it? They can go on tilt, right? And so then they can start, seeing red, and it can cost you an account. It's just not a good thing to do. And then next question will be, were you able to think in odds and probabilities? Right? Did you think in odds and probabilities, right? or are you trading the value? And what's the value, right? Or what's the odds and the probabilities of developing value higher if we're just getting into the previous day's value area and it's already E period? What's the odds and probabilities of having overlapping value to higher? Well, they're pretty good, right? Unless there's a liquidation. If there's no liquidation, then I probably want to start getting long or exiting my shorts, because you're getting the move down. It's late in the day. We're just getting to yesterday's value area. Let's say you're short from here or from the prior month low, right? A lot of people got short 19. They're probably using the high of day as their stop, and they're targeting, probably the Globex low or something like that. So, let's say some people are short this distance here, and their target is either the break of the Globex low. Yeah, is probably the key. And so you can see the distance here, right? And we can use the tool to measure real. I like this tool. If you guys don't have it on Sierra charts, you can kind of see where your risk versus reward is at. So put it here, put it here, put it here, right? So it's a 2.68 trade. And so that's a good trade, right? That's a good mechanical short. And this is something that we've talked about. Just because the mechanical trades are weaker traders, that doesn't necessarily mean they can't control the market temporarily, because most days, being balanced days, are a combination of weak-handed traders, buyers or sellers, right? Not a lot of other interaction there. And so one side can win. And to go with them when they're winning is a great trade, I think. And so, but that being said, that being a great trade, you need to be paying attention and know when to exit the trade as well. And so as they start breaking the Globex low, what do they start doing? Probably taking profit, right? So you have a day where most of the selling is coming from short time frame traders, and somebody larger is liquidating at the same time, but short time frame traders stop selling. So the selling was not really as big, and most likely profit taking, because we don't get excess. You get that B shape. So when that B shape starts to form, and it started to form a little bit later in the day, it gives you an opportunity in the next couple periods to start saying, okay, now I definitely need to get out, right? Let's say if you didn't get out in that bounce in the D period, it's still low, didn't even get above this high, so I'm gonna keep staying in my short. Comes back down but makes a new low, and then the next bar doesn't make a new low. That tells you, okay, we're starting to get this poor low type of shape. I probably should start exiting my shorts. So this is one of those times where there's some good opportunity on both sides of the market, right? We've talked about that before. A lot of times, you can get on good trades on both sides of the market at the same spot. It doesn't normally line up like that, but sometimes it does. And then the last question, sorry, we went off on a little tangent there, but the last question is, what was the message from the market today? What was the market trying to do? And basically, did it do a good job, right? Or what can we gather from this? Well, we can kind of gather that exactly what we just talked about. I guess I kind of jumped the gun, but basically how it formed a poor low, and shorts should have been exited, and there was opportunity for buyers or buy orders to be entered. You always want to remember these key concepts: excess and balance, right? These are, the two most important things. Balance and value is basically the same thing. Always think about some exponential data points, right? Like previous highs and lows, monthly highs and lows. Certain closes are something specifically that I like to pay attention to, the ones that haven't been touched. And then always your information to carry forward if you get a poor high or a poor low or something like that. So now let's keep moving forward, and we have yesterday's vision. Let's kind of hide the overnight from today, and we ask ourselves, or we review the overnight inventory pre-opening. So we're like right here, right? The market's about to open up, and we're saying, is it long or short? Well, we identified overnight inventories long, right? All the trading, be it mechanical right off of the settle, is long overnight inventory, right? Is there a single or double distribution, right? We talked about that this morning. Just one big fat distribution for the most part, a little bit of liquidation above, but more or less it traded there already, so the price didn't need to trade there anymore. How wide is the overnight point of control, right? We had 12 TPOs wide, giving the odds that we retest it, or making the odds that we retest it fairly high. Did overnight trading weaken structure or cause a gap, or did it balance, or was there a spike, right? All the questions that you ask yourself for the regular profile, you ask yourself for the Globex profile. But in this case, the Globex profile traded 100% inside the previous day's profile, and for the most part didn't really do anything to structure or anything. It did leave a poor high behind, but for the most part traded, cleaned up a mechanical level and left a new. Current price range is the next thing that you want to be paying attention to. Key levels as well, but and price range, when I say current price range, what I mean is like, where's the current balance? And remember, this is something that I think that people get confused upon, is balance can be 1 day, right? And that's where it starts, actually, is 1 day, and then it moves to 2 days, right? So balance kind of always starts with 1 day. So when you're looking at a profile, right, and we have a decent example in these 3 profiles, because this doesn't really look balanced, right? Kind of looks like a P shape. This looks pretty balanced, right? This doesn't look balanced. Looks like a B shape. And so, if we had moved up and we get this liquidation yesterday, and then today opens up, gets below the settle, well, the market balanced here before. That would be your range. So where's good buying opportunities? Lock them in, right? If that's what would have happened. But that's what I mean by the current price range. And so remember, we're just getting to the opening yet. So the current price range, we assume, right, to kind of even out this profile, would be maybe something like this. Right? So even if there was a pullback, this would become like a key area to start getting long from. But those are the areas, 84 and then up to your 31. Right? We're higher than that now, but for the sake of the example. I think we talked about this yesterday, but day trading is mostly driven by constant readjustment of inventory. And then to track the inventory, we want to look at the past couple of days, right? And that's something that we've kind of touched on yesterday. And for the most part, is pretty common knowledge, right? 85% of the days are trend days. 85% of the days are rotational, 15% of the days are trend days. One key thing, and I really can't stress this enough, is you want these basics of the market profile to become second nature, right? Like we talked about yesterday, like breathing. And until that starts to develop, your biggest thing that you need to do is survive, right? And that's kind of a thing with with people when they first start trading is their goal is to make money, right? Or to do whatever. But really, the goal at the beginning of this game is survival, right? Survival to build experience. Like I said, I think everybody can learn how to trade the market. It just doesn't happen, or the reason that they say 90% of people fail, it's because 90% of people run out of money before they succeed, right? And that's because their goal is to win. And really, like I said, the goal is survival to build experience. Um, I think that's one of the most important things that we can really kind of drive home. Um, Something Jim Dalton always says is that learning is layer after layer until you're unaware of the basics, right? So they're just second nature. Um, then as we're going into the open, right, kind of picking up from where we left off, personal accountability, right? So we did some self-reflecting, we traded, and we're getting ready for the next day of trading. And so personal accountability, we ask ourselves, did we prepare for the day, right? How many trades are you doing, right? You should have your trades kind of planned before the market opens. Um, how much did you spend on commission? Are your trades with the trend or against the trend, right? The trend yesterday was down, right? But value was up. So there was opportunity on both sides. Did you trade with the value or against, right? So it's a sticky situation yesterday, but a good trading example, to be honest, because you get kind of that feeling yesterday was a boring day, but yesterday was a good example of when to be in a trade and when not to be in a trade. It was a very good day for review. Um, while you're giving yourself your personal accountability, don't look for a trade. Look for and read the market. Right? You're not looking for a trade, you're looking to read the market and then react based off of your reading. We measure the overnight inventory from the settle and the gaps from the highs or lows, right? I talked to you guys about how I call it a Peter Resnicek gap from the settle and from the high low gap, just what everyone else calls it. Um, and then let's get to overnight inventory. One thing I want to bring up as we're coming into this open, and we can even do a replay here because the market's just kind of broken the high and trading at the high. Um, but a lot of short-term traders are over anxious to be in the market, either to be long or to be short. It doesn't matter. It just to be in a trade, right? A lot of short-term traders just feel like they have to be in it, and so if you have that feeling, or if you're in the room in the morning and we're all like, oh, I'm in a trade, I'm in a trade, I'm in a trade, don't feel like you need to be in a trade. Stick to your plan and trade your plan. Right now, if your plan needs to be adjusted, then that's something that you find out over time by documentation. um One thing that so as we go into the next open here, we'll open like 44.10. What has to happen to change value? Right, so right now value from the previous day is here, right? 70% or 68% of the previous day's range is here. So from 44.10 to 43.97, let's say. Okay. That's where value's at. So what has to happen in order to shift value lower? Well, we'd have to move down this way fairly quickly and then stay down here. Right? So what's a key reference? Well, P plus too high. If we move down below that, start to stay below it, well, let's sell it, right? If we move down below it and then trade back and forth over it, well, then we're going to have overlapping to lower value, right? So that's that scenario. What's going to happen to have value higher, right? This 44.10. Well, this market's just going to have to pick up and just stay above that 44.10 for the rest of the day, right? And that would be value higher. And value lower would be it gets above this 44.10 and trades back and forth across it, and then we have overlapping balance to higher, right? And then there's your very last scenario where you have balance exactly overlapping and the market just trades inside, like that for the rest of the day, which makes it fairly easy to trade because you just trade the edges, right? If that were to be the case. So those are your scenarios. What we want to make sure is that those are your setups, right? So let's say going into today, and let's look at our setup for today. Our setup for today was here. So we can see we had combined a 5-day profile here to show this larger balance and these larger distributions. And we said from 43.96 to 43.90, we think that there's long opportunity to trade back inside the prior month's low, right? Below that, or if it moves down into that level and starts to chop, we were looking for it to trade lower down into this lower distribution and down to the 72 quarter. So that was our pre-market kind of trade setup. So what I'll do is we'll go to the replay chart, replay chart. Let me switch chart books because this chart book has too many things. Okay. Let me close this for now. We'll go to chart. We'll go to replay chart. Date today was the 23rd. So this is going to open right at open here. And it's at 1 time speed, so it's going to be moving pretty slow. Let me pause it. We can draw our trade plan here. Studies, TPO. Let's put it in 1 tick so we can actually see the movement. And we're going to play it at 5 times speed, actually, right? And so we had talked about this 90 to 96 area as our possible long opportunities, I believe. Yeah, 96 to 90. Right? Or anything above that, we were kind of, looking. I was liking that Globex slow. So let's press play here. We'll go 15 times the speed for now. So you see immediately off the open, we popped that Globex high, right? Remember the settle was that 10 level. So kind of immediately we're thinking, not going to get a correction to overnight inventory, and looks like the market's pretty strong to start the session. So then we have to kind of start identifying, where's going to be our key levels to kind of find an entry, right? Because where we wanted to get in might not come up. And so because we get an immediate move above yesterday's value, we're thinking these are our two scenarios here. One, the market's going to keep going and we're going to get value higher. Or one, there's going to be overlapping value and it's going to be higher because we moved up and we're going to spend time up here. Right? And the counter to these trades is, you could be a mechanical, but pay attention. If we moved higher and then moved lower and then even moved higher and then moved lower, well, now we're starting to get overlapping value. If we're in a long, we probably want to get out, right? Because the better longs from overlapping value are lower. So let's go ahead and play. Remember, we had news early in this session too, so we weren't really looking to get into a trade. Market comes back down to the previous day's value. That's a good buying opportunity there. And obviously we know that hindsight, but like we just talked about our 5 scenarios, that's your opportunity. But let's say you weren't getting into a trade during a period because the news, right? Didn't want to get caught in any news, bullshit or something. Speed this thing up here pretty soon. We go 30. So a period continues the upside. Come on. Right. And so now we're kind of leaning on, well, B period opens and can't get back into yesterday's value, we'll probably have value higher. Right. So there's the B period open, comes down, gives you a perfect opportunity. Let me pause it. Kind of gives you a perfect opportunity to get in. And even some of our, I think a lot of people, I think we all got in at like 23. I know I had a re-entry from 23. But B period gave you that kind of clear opportunity when it came lower and couldn't get back inside the previous day's value. Right? Value's here. So if B period only comes this low, the odds start to increase that we go with door number 5, value higher. We're going to continue playing now. B period extends the range up. So let's say you got long from 23. Might be a little bit too late to put it in, but yeah, let me just pause it because let's plan this trade from top to bottom. We don't just want to enter blindly and be like, okay, well, I'm just fucking in, right? So we'll use our tools here, use our risk to reward. We're going to say our stop was going to be basically, I mean, you can see the huge difference here is, but B period stops, something on the order flow gave us the 23 level. So we'll mark that 23 level. Oops. We'll say we'll use the B low, right? Because B low couldn't break into the value area. And then 23, our entry, actual entry. And then our target naturally is going to be the Globex high, right? And that's your 3-to-1 there. You can exit at yesterday's high. If you have a mirror, a little scalp up here, but the real trade, was, back up to that previous untouched Globex high, and that's that what's that 39.75, right? And that's that level that we talked about this morning, um that I got out like 2 points below because I chickened out. So there's your trade setup. And so while we're here, what I want you to think about is the other side of the market, right? As we're coming into this. So the other side of the market is short-term traders, right? We see volume still down here. So what are they? Probably short, right? What did they do when B period opened up and came down a little bit? Probably got short again. Where'd they get ran over? Globex high, boom, stops. Okay. So now the buyer's kind of mission becomes, well, I need to hold this thing above Globex high to get this continuation, right? And you've got to think about, sometimes what can happen is short day time frame traders can be almost fuel to take the market to new levels. And you'd be blown away what risks human psychology will take just to get back to break even, right? People will be shorting the Globex high, and they were shorting such mechanical levels today. That was our key today. Anyone that was in the room with us this morning, we just absolutely punished the market today. Um, but you'll have the opposite side of people short here, and they're like, it's going to come back, and then they'll double their short at the previous day's high, come back, then they'll 4x their short at the 44.40, that untouched Globex high, right? Until they're dead, right? Until their account just gets banished, right? Because they're not trading value, they're just trading price, and like, it can't keep going up forever, right? Tapping themselves on the side of the head. Um, and so let's just continue the replay from here. And remember, we had said we don't really want to see it back below this Globex low, or Globex high, excuse me. C period opens up. They fail to fill single print. So it comes right back down to our entry and bounces right off our entry, right? No reason to get out. Continuation occurs. Now's your time to take a little bit of profit, maybe, if you're trading multiple lots. Now you're seeing the second wave during the C period, those stops from T1 get ran over. And you're still seeing day time frame traders continuously short and get stuck and used as cannon fodder to move the market high. Let me see. When I see that selling had shut off, what would be a sign that the liquidation has sufficed and the rally is on the way? Well, let's pause it for a second. That's kind of a that's kind of a hard question. So the question is, when you see the selling had shut off, would that be a sign that the liquidation sufficed and a rally is on the way? Not necessarily, um, but what it does alert you to is something that's really just as important, And that's that you don't need to take a trade. Some days are not good trading days, and playing defense is just as important. And by playing defense, I mean staying out of a trade, right? So when you get this poor low down here, that's the one you're talking about, I imagine. Um, or when you're seeing selling shut off down here, you don't necessarily want to assume a rally is on the way, but what you do want to assume is that you shouldn't be entering any shorts, right? That's your first assumption, right? There's a lot of situational factors where you would think a rally's coming because it's a good spot, or let's say, forms a poor low in a spot that you want to buy. That's great, right? This poor low formed in our Brad prints from yesterday, right? So it was in actually a really good spot, which is why I took the overnight trade. Um, but yeah, so you don't want to just assume a rally's coming, but you do want to assume that probably getting into shorts is not a good idea. Let's continue to play. You see D period opens up, gives us a poor high look, almost right to our level. I got out right here like a chicken. I was thinking, yeah, you know what? Maybe that's all she's got. Of course, keeps going. Gets some excess here on the high. So we've got two sets kind of single prints. We've not really one, but a mechanical C low, and then single prints, which is a kind of a form of excess, I guess you could say. And so the odds are starting to increase now that we're trading higher. That value is going to be higher, right? And so now that I got out of my trade, I'm thinking, where am I going to get back in my trade? So let's pause this for a second. All right, we'll continue just going over these trades. So our first trade was here to 39.75. Oops. Um, we didn't really take much heat at all. Got in at 23. So 23 to 39.75 is, who's a math genius here? 20, we'll just round it, 16, right? So that's an $800 trade or an $80 trade, depending upon ES or MES, right? Just one lot. So if you traded multiple lots, the number would be higher. So that's kind of our first look. And now we're looking, okay, where do we want to get back in? Because we're going to get value higher. Well, we want to be, close inside this value. We know we don't really want to see these single prints close. So it becomes kind of an interesting area to buy if they can't get down into these single prints, or if they can't break this D low at all, right? So I kind of like looking for a little bit above that, and then my stop is typically at the bottom of the single prints. And then, in this case, I probably wouldn't. I really was looking for 44, 44, I think. So the risk is a little bit bigger or tighter, but a good opportunity, I think, is kind of setting up here in the day. And that's because value is developing higher. So you kind of see what I just want to make sure that you guys understand why this entry is the entry, right? And the reason is because that's where we're balancing. So if you take D period and break it apart, there's your balance, right? Move this whole thing over here. There's your balance, right? So you can combine this even with the previous profile. You get excess here, right? Boom, excess up into the open. And then all of a sudden you get overlapping bars. So we start the balance. So now we have a little distribution here. right? Little distribution. Well, where do I want to play? I want to play right here, right at the unfair low, right where there's excess. And the reason is because I know there's a poor high, unlikely to hold throughout the day, especially on a day where we're developing value higher. Right, exactly. And that's because of value. Yesterday, the reason the poor low put me off is because even though it was a poor low, value was still likely to develop higher from the previous day. Right. That's a good point, Zoe. And so that's kind of what we're focused on. So let's go ahead and continue to play. Let me get this out of the way. It's the old trade. We're just taking this period by period, right? I mean, we trade by trade, I guess you can call it today, but period by period. Next period opens up, right? Another poor high. Now we're thinking, 3 periods in a row. I'm not a huge fan of that. Gonna have to be careful here. I still like the trade, but if I'm gonna take this kind of risk, then I might need to increase my uh my reward here. Um is something that I was kind of thinking at this moment. Or if you're in a position, you just lighten up. Maybe that would be something you can do. I was in the garage, so I didn't touch it, but right here could be a spot where you would just lighten up. If you're in 3 lots, take 2 off for a little bit of profit there. Um, that way if it hits your stop loss, then you just break even on that trade and no harm, no foul. I'm gonna speed it up. G period opens up. It's inside, still doesn't break that F low, right? So you still just get that continuation to the upside. G period breaks the high. We're going to continue on fast speed here. Comes back in, H period opens up, gets back above. And so here's a kind of a key thing. Pause before we break. Um, remember what the market does. The market moves from balance to imbalance and then to balance again. Right? Well, look, your 5 TPOs wide up here, even 6 with C period, right? So when H period opens up, and it opened up like basically right at the top of this, it opened up right in the middle of it, I mean, went 2 ticks down and then broke the top. Well, that's almost a go with situation as well, to be honest, because you're breaking out of a short-term balance. And the first thing that we want to do is go with the trade. That's always the best decision. See, H period just fucking goes here. Oh, I just said the F word and ruined the YouTube. Huge set of single prints, right? We know large sets of single prints are unlikely to hold. So we've already taken profit on that second trade. Now we have a trade opportunity here. If H period comes down or if I period comes down into H period and doesn't close these single prints, we can get long against that single print low, I think, and possibly get the continuation higher, right? Setup didn't show up. So what do? You sit out. No, there's no setup. And I think we're back to are we back to yeah, we're back to live now. Let's go ahead and close this. We'll close the chart book. All right, we're back to live. Let me open up Thinkorswim again. And yeah, that's it. So really kind of the key thing once again is that we want to be kind of maintaining our perspective on value always. But I hope you guys enjoyed, and we'll do another one tomorrow for sure.